Chapter 24. From Contract to Completion. Which one of the following statements correctly describes the manner in which taxes are adjusted? 1. If the seller has already paid the current year's taxes, the seller must be debited with the taxes from the adjustment date to December 31st. 2. If the taxes are overdue and a penalty is owing, both the amount of the taxes and the penalty must be apportioned between the buyer and the seller. 3. If the taxes are not yet due, no adjustment is made until the tax statement invoice arrives. The correct answer is none of the above. Which of the following statements relating to statements of adjustments is false? A brokerage's real estate commission always appears on the buyer's statement of adjustments as a credit. Which one of the following statements correctly describes the manner in which taxes are adjusted? If the seller has already paid the current year's taxes, the seller must be given a credit of the taxes from the adjustment date to December 31st. Vince has agreed to sell his home to Pedro for $75,900. To assist in the purchase, Pedro is borrowing $65,000 from his uncle as a first mortgage loan. Pedro's loan from his uncle will appear only on Pedro's statement. Where a deposit is paid directly to a seller on account of the purchase price, the amount of the deposit will appear as a credit on the buyer's statement and a debit on the seller's statement of adjustments. In a particular real estate transaction, taxes for the current year, in the amount of $516, were paid by the seller on July 1st. The adjustment, possession, and completion date is July 28th. Where would the tax adjustment appear on the statements of adjustments? As a credit on the seller's statement and a debit on the buyer's statement. Which of the following items would appear on the buyer's statement of adjustments as debits? Buyer's share of taxes paid, purchase price, and conveyancing fees. If an item of the buyer's personal property, such as an automobile, is accepted by the seller as part payment of the purchase price, the value of the traded property is listed as a credit to the buyer and a debit to the seller. You have sold your property with the adjustment date on September 20th. You had paid the taxes on July 2nd. The buyer should be responsible for that share of the tax bill from and including September 20th to December 31st. Benson has purchased a home from Vanessa. The sale is completed on April 15th and the property taxes are adjusted on the completion date. Property taxes are due on July 1st. In this case, Vanessa will have to pay Benson for the share of the taxes from January 1st through April 14th. Which of the following statements is true? On the completion date of the sale of real property, the buyer is usually entitled to the transfer of title. Vince sold his property to Paulo with a possession and adjustment date of May 1st. Vince has not yet received his current year's tax notice, but last year's taxes were $847. Paula's lawyer feels taxes will increase 20%. Which of the following is correct? Vince should be charged the estimated taxes from January 1st to April 30th. Which of the following statements is true? Where the licensee acts only for the seller, real estate commission always appears as a debit on the seller's statement of adjustments and does not appear on the buyer's statement of adjustments. Valentina has agreed to sell her home to Petra for $140,000. Petra has saved up $15,000, which she paid to her brokerage as a deposit. The deposit will appear as a credit on Petra's statement only. Which of the following is true? The possession date in a standard form contract of purchase and sale is the date on which the buyer takes vacant possession of the property, subject to any existing tenancy agreements. At the time a transaction is completed, which one of the following items will be the responsibility of the buyer? Costs of preparing a first mortgage. Which of the following items would appear on the vendor's statement of adjustments as debits? Legal fees for discharge of second mortgage, sales commission, and assumption of first mortgage. Valerie has agreed to sell her home to Phil for $75,900. The real estate commission payable by Valerie is 7% of the selling price. The real estate commission will appear on Valerie's statement only. Where a deposit is paid directly to a seller on account of the purchase price, the amount of the deposit will appear on both the buyer's and the seller's statement of adjustments. Which of the following would appear as a debit on the seller's statement of adjustment? 1. The amount of a mortgage that the buyer will assume. 2. The legal fees involved in discharging a judgment from the seller's title. 3. The amount of a penalty owing for overdue taxes. The correct answer is all of the above. In a real estate transaction, when the property taxes for the subject property are not yet due and will be paid in the future by the buyer, the seller's share of the property taxes will be debited on their statement of adjustments. Vincent and Pamela signed a standard contract of purchase and sale for the sale of Vincent's property. Vincent agreed to give title free of encumbrances. Pamela is putting on a new mortgage. Costs are as follows: legal fees for conveyance, $400 legal fees to discharge an existing mortgage on title, $100. Which one of the following statements is correct with respect to the statement of adjustments? Pamela should be debited $400 and Vincent should be debited $100. Victor is selling his house to Paula with an adjustment date and a possession date of August 16th and a completion date of August 14th. He is concerned about the fact that he just filled his oil tank. Which one of the following is true? Victor could arrange to have a reading done on the adjustment date and make an adjustment privately with Paula for the cost of the oil remaining in the tank on that date. Assume that it is not a leap year. A property is sold on the following terms: price, $195,000, cash. Commission, 5% on the first $100,000 of the sale price and 2.5% on the balance adjustment, possession, and completion date, August 28th. Taxes for the current year were paid by the seller on July 1st in the amount of $1,015. The buyer has paid a deposit of $20,000 legal fees for the conveyance amount to $491. Where would the tax adjustment appear on the statements of adjustment? As a credit on the seller's statement and a debit on the buyer's statement. Vanna has agreed to sell her cottage to Pat. Vanna and Pat used a standard contract of purchase and sale, in which they agreed to the following dates: completion date, August 31st, 2018. Adjustment date, January 1st, 2019. Based on this information, which of the following statements is true? There will be no adjustment for property taxes on the buyer's statement of adjustments. Where would the commission appear on the statements of adjustments? The commission only appears on the seller's statement.